All right, hey there. Good morning, everybody. Christopher Franks with Texas West Capital. It is just after 11 a.m. Central Standard Time here on, what is this, Tuesday, the 31st of August, 2021. Guys, we made it to the end of August. Almost. Some of y'all are ahead of me a bit here. You might have made it already. The rest of us are trying to do so. Guys, man, we've got the last quarter coming up here, Q4. And so the big question is it going to play out like 2017 more or less? I say 2017, but pretty much any of those other major tops Bitcoin has had, where we just get this scaling in of demand here. Price just kind of rallies up. Usually happens around October or so. And so if that happens, then, we've got about a month to kind of get up toward that, because what it would be the breakout above the all-time high that would get everybody excited. So we'd have until about that time, another month or so here to get up there and get going. So anyway, checking in with y'all here. Beautiful Bernie, Texas. Nice sunny day out here today. Good to see y'all checking in. Who's here already? Mark's here. Boris, what's going on? He says, a lot of work waiting for me, so have a great day. Yeah, get that work done, man. No reason to lose the job over this, right? Hey there, Brian. Good to see you. Q, the action is here as well. Michael Williams, Spiral Architect. Good to see you guys. Mark says, first time in a long time that Chris has something on the wall. Yeah, I finally put it up. It's nothing overly, exorbitant or anything like that. It was a nice print that I got put on canvas there. Y'all can get it too over on Amazon. I'll link it if you guys want later. But just a little something put on the wall there, and added everything into the desk here, and just kind of, you guys know I moved this over here from a while ago from the main office into this other room because we were having issues in that other office, and just have never got around to really kind of setting it up over here. So kind of taking the opportunity to do so here lately. So hopefully it looks a little bit more interesting for you guys, right? Let me see here. Bill is here. What's going on? Data's checking in. Let's see here. Jared the Great. What's up, man? Thanks for the KSM explainer last night. You're very welcome. Thanks for asking for the question there. Guys, hey, listen. If you're in here with us, by the way, you can join us at howtotradetowin.com. We'd love to have y'all in. I do what I do, guys. I'm just a guy that does a thing, honestly. And it's nothing that nobody else can do. I think there's just some people are better at explaining things than others, but overall anybody can do it. But really, I think one of the greatest draws to what we do is our community there. And so I like to think that it's the way that I do things that allows, that keeps them there, that they end up staying there for years like they do. But that just happens to build. They're there for a while, and it just builds that feeling of family and community and everything. Very helpful with everybody. I saw one member helping another out with getting into some scripting and whatnot, and talking about coding for smart contracts and whatnot like that. So a lot of great stuff going in there. Come on and join us. We've got well over 100. I don't even know how many hours we got now. We got well over 110. I've been saying that for months now, I think. But we get the tier 3. You get the three weekly live streams. You get Monday we look at Wyckoff analysis. Thursdays we look at Elliott Wave analysis, and then Wednesdays is our tips, tricks, and techniques, where we kind of look at rules-based systems, and we dive in deeper into price pattern analysis, candlestick analysis, different indicators, and how to use them. Explaining them to you so you understand what they are, which will give you the ability to potentially go in there and kind of use it with other indicators to get a result that you're looking for, or mess around with the understanding how it is you can go in there and change the settings, and you understand what you're doing. And give you ways to use that to trade. So anyway, yeah, we've got all that. Oh, hey, something new we just started this week. We have our weekly, our daily, intraday, whatever updates that we do for everything. And so we've got daily updates on a whole bunch of cryptos. And so we've started this thing this week where every weekend we take a poll, and the members can choose, the tiers 2 and 3 members can choose 2 of the daily cryptos to replace for the week. And then I'll give them a list of other cryptos in there, and they could choose 2 of those to replace them with. And so this week, BCH and BSV are out for the week only. They'll be back next week. And you can't vote them off again till the following week. It's like all these reality shows you guys watch. You don't really watch them, right? I hope not. But anyway, and then the 2 we replaced them with are Sol and, what we do, Matic, right? So we've got Sol and Matic up on a daily update basis for this week. So lots of good stuff in there. Exciting, I think a new exciting kind of freshening up there of the updates that we get to do now. So, Mark, you thought it would be a shelf with the candles on it? Man, what are you thinking? 51H, good to see you. Sver's here. Navlusian is here. Droid DR, good to see you guys. Who else is showing up? Tal, what's up, buddy? Good to see you, man. I hope you are doing well. A lot of craziness going over in your area of the world over there, man. I apologize for our part in it. Man, it's just craziness going over there, right? You know, America just ending its 20-year war over there in the Middle East. Longest running war. You know, just a bunch of craziness going on there. History teaches you that you're not going to come in there and you know, and force everybody to work together and do their thing. I mean, this is just history. But anyway, we won't go into all that. Just hopefully everybody's anybody over in that area is safe and you know, just being careful. You know, I find myself concerned. A lot of y'all are, you know, I consider friends, and you live, you know, that way. And so hopefully you guys are doing all right. Chris Day, good to see you. Devin, what's up? He says Ethereum ending diagonal for the 5th. For the 5th what? You have to tell me what you mean. Remember, guys, I'm on this other side here, and sometimes my brain's going 50. Well, usually it's going 50 different ways, so you have to be as specific as possible when you ask questions. And that just helps me, hopefully, answer your questions more intelligently. Hey there, my king. Good to see you. Hank is here. He said he just paid for his first vacation with the insane Sol SRM profits. Caraco, here I come. I know I said that right. Yeah, anyway. Entertainer Lamb is here. What's going on, buddy? Devin's here. Bianca, what's up? Brian says we voted off the real Bitcoins, but they'll be back next week. And then you'll have to pick 2 different ones if you want to, and then, of course, replace them with potentially 2 other ones. So I think this will be kind of fun. I think we'll see how this works out. And it also gives me a better understanding to our members and what they're looking for and whatnot, so we can continue to make it even better, you know, what we do. They're always trying to make it better. What's my thoughts on DOT versus Bitcoin? I don't know. I'll have to check it out. Remind me in a bit here to check out the chart, all right? Andrew, what's going on, man? Good to see you. Yeah, I know, Tal. I know it's not the exact area that you're in there, but you're over, you know, you're a lot closer than I am to what's going on over there. So, yeah, that's all I'm saying. Believe it or not, I'm actually one American that has a good understanding of where things are in the world. Esteban, good to see you here. Chris Day says he'd love to see ADA bust $3 and hold. I know, right? ADA doing some work here. ADA, Sol's up. Sol's up, what, 4 times in the last month or so? Something like that. But guys, guess what? Are you paying attention to everything else? Because have you been watching the indexes? You know, we're going to take a look at them today, but we've got potentially 2 topped out counts. One on NASDAQ, one on the E-minis. And the Dow Jones, I don't know. You know, Dow Jones, maybe it's printing a truncated 5th on it. We'll see. But you know, remember, guys, I posted that that tweet not too long ago. It was probably, what, a week or 2 ago? Where I mentioned that back in 1987, you know, 1987, for those of you that don't know, there was Black Monday in October, which is where the stock market just dropped like ridiculous. It was huge. And it seemed like out of nowhere, right? But anyway, the market topped out in September, or I'm sorry, in August. And then you had Black Monday there in October, and you had the entire month of October just sucked. Big, huge drop off, right? The same thing happened in 1929, right before the Great Depression. So in August of 1929, you had a top out of the market, and then in October you had the drop off. So, what happens? Guys, I know you guys want to be very, very bullish about Bitcoin. You want to be emotional about it, but here's the thing. Remember, Bitcoin has been in a secular bull market for, since its inception, right? It's never known a recession or a depression or anything like that. So the reality is we don't really know for sure how it's going to play out. We do know that generally in those periods that risk on assets are sold off pretty quick, because nobody wants to be in the riskiest of assets when everything's dying, right? When everything's dying off, economy's rolling over and whatnot. And so, Bitcoin, whether you want to be realistic about it or not, the truth is the truth, guys. It's a very risky asset still. And that's because we have such large, we can have these catapulted liftoffs, and then these death spiral things going on, until you make significant advances and significant declines in short periods of time. And that makes it a risky asset. And so, if the economy rolls over, then, what happens with Bitcoin? Well, we'll find out. Right now, we've still got the potential higher highs, a new all-time high still coming in. We're still looking at that because price hasn't done anything to suggest otherwise and yet. Now, it may do something, but right now it hasn't gone through levels it needs to go through that says you should be more worried about downside than upside. So, that's kind of where we're at. Remember, overall, Bitcoin's in this advance, this rally, right? Overall, locally, the last few months, it's been in that decline, and then, since April, there, had that decline, and then for the last, month or two or whatever, we've been in a rise. But the larger picture is that we're still on this upside, and we haven't really broken down any levels that we need to break down to say, oh God, the top is, most likely in. It could be, but we haven't done anything that says we need to. And right now, off those lows, price has been acting pretty bullishly. So we'll see where it goes there. Let me see here. Let's go and pull up Bitcoin. Speaking of it here. So this is the 15-minute, and overall, we've kind of worked with the count here as it develops. I've got this right now potentially as a 1-2 here off this low over here. So we've got this. I guess let me zoom out and kind of zoom and work my way in here, guys, just so you can be aware where we're at with the count here. So I've got this as a where is this right here? As like a 1-2 here. And then from that, we've got a 1-2, and then 1-2, and then 1-2, 1-2. Trying to get this in here. And so when this happens, again, you've got two ideas here. One is that it's either being sold into and it's going to decline off here, in which case the counts become invalidated, or it's picking up some support in this area before it just really just rallies strongly through the top there. So, locally, we haven't broken down yet. So I've got this as a 1 and 2 here. And it may be done. It may. We've got this 1, 2, 3, 4, 5 as this leading diagonal here. So that would give us an A, and then we'd have our B, and then we'd have our C here, which makes this potentially a 1, 2 coming off here. So at this point, the good thing about what's going on here is we're kind of consolidating more and more. So we're getting closer to, this idea of we may be headed out, one way or the other. So it gives us a little bit more ability to trade it a little bit better. So what am I looking for? Well, right now I'm looking for price to remain above 46,708.93 cents. And if it does, if we can get this rally back up here, because when I look in here, at this right here, it looks like we got a 1, 2, 3, 4, 5. So that's 1, 2, and then 1, 2, 3, 4, 5 gives us a 3, 4, and then 1, 2, and it'll be 3, 4, 5 here for 5. So it looks like we've got a leading diagonal off here. And so then we'd have to have an A, a B, and a C drop a little bit lower here probably, and then head up. So that's what that's why I'm looking at this here as potentially that. Looks like we may have a 1, 2, 3, 4, 5 as a leading diagonal. So what I need to see is a breakout above this swing high here at 48,259 and 68 cents here on Coinbase. A nice impulsive breakout above that takes it above the descending channel resistance. And doing that should then carry price above the pivot and above the wave B resistance here at 48,718. And getting above wave B should add confidence to the count here. And if we can get that, then we're looking at this minimum wave parentheses 3 target up here at about 52,158. Now overall, we've still got all these other targets up here. We've still got a minimum wave circle 3 target, which is a larger degree there of 56,975, and then a wave 3 Roman numeral 3 there target up there at 61,450. So we've got to start taking out some of these highs here along the way. But here's the other idea, guys. If price breaks down below that swing low, it's pretty close to the swing low over here for this larger degree wave 2, wave circle 2, okay? And so something I've been talking to Discord for a bit here, if this didn't continue higher here, if we broke down below, is the possibility that this is an A, this is a B, and this will be a C coming down. And so then wave 2 will just end over here instead. And in that case, my initial target is this 70.5 retracement right here, about 45,793.5, because that puts it right there at the EQ of this demand structure right here. So right around that area, it's also a little bit of a high volume node there. So if we do break down below this wave 2, then we'll probably break down, I think, below this wave 2, which will give us at least a target of 70.5 there. Now, obviously, if it continues going down there, there's all these other possible targets. Heck, it could even get down here to the S2 pivot on the 1 hour here, which takes it right into this other demand structure here at this high volume node beyond 90%. That's possible too. So the goal is, if you're going to long, for the larger bullish count, you need to wait for confirmations. Now, you can long on the pullback that happens here and get like a short rally off it, but you have to be realistic with what you're doing. If you're longing a low somewhere without price confirming that is the low by breaking out above needed levels, then you're taking the much greater risk, especially if your plan is to long there and to hold well up. So, my suggestion is just to be smart when you're trading, guys. If you're going to long off a swing low because maybe you've got a bullish divergence or something, that's fine. But just do yourself a favor. Have a local target just in case it's only a local rally, just a dead cat bounce. Okay? Don't long that low thinking you're definitely going through the target you need to go through. If you want to get on those, make sure you enter after it breaks out. Now, that's going to be your safest way to do it. Otherwise, like I said, again, if you're doing it before you get beyond those levels, you're just asking to potentially lose more money. Because what happens is mentally, remember, it's all about the mental side of it, guys. And what happens is you're longing down here, and it's a good entry, but it's a good entry for a local trade. And so but you're thinking of the larger trade, but it doesn't ever get through that level, and it comes back against you. And then you're thinking, oh, it's got to get up there. It's got to get up there. It's got to get up there. And then instead of actually reaping what you sow here in terms of potential profit, you usually allow it to go below your opening there, and you just continue to drop on down. And you know what? That's no fun. That's no fun. So a lot of trading, guys, is just being honest with yourself about where price action is within the chart. Don't blow smoke up your own rear end, guys. We're real good at doing that, as new traders. You become really good at doing that. You lie to yourself. And it's not just in trading, it's in life. We tend to think we are better at things than we are, and we tend to minimize how bad we are at things. And so part of being better as a trader and just better in life is recognizing that and then doing something about it. You're not going to get anywhere lying to yourself, guys, day in and day out, okay? Let me see here. So are we seeing a double bottom on the 4 hour around the 46.7 area? So you're looking at this right here. Potentially. And so if it were, it looks like an Eve and an Adam double bottom here. What you need to confirm that, just because it looks like one, it won't be confirmed as a double bottom, a potential double bottom, until it breaks above the swing high in the middle here. So this 49,667 and 10 cents. Beyond that, if you get that, then your pattern target here, based on this the height here of that point. So pattern target would be about right up here, right around the R2 pivot on the 1 hour, right here at about 52,800. But price has to actually rally above this level and then remain above it. If price rallies above it, let's say it does this, right? It rallies above this thing here, and then it drops back down into it, and then it goes up. At that point, yeah, the price is going up. It's not this anymore. In order to retain the double bottom pattern, price cannot drop back down into it. So you'd have to see some other kind of thing, something like this, where it pulls back and stays above it, just retests the support and continues up. If you drop back down below that swing high there, closing that in there and everything, it invalidates the idea of the pattern. So that's what you're going to look for. That's what your pattern target would be if that's what you're looking at. Yeah. Now again, the same thing could potentially happen over here, but I wouldn't really look at this as a double bottom here because overall we're at the top of this rally. Remember, double bottoms are reversal patterns on downtrends. They're not continuation patterns. It'll be something else. It might look like potentially a double bottom right here, but when you look at what double bottoms are, it doesn't make sense. It doesn't make sense, that you pull back here and then you make a new high, and then you pull back again. They're in a downtrend. This would not be in a downtrend. This would be the top of an uptrend. So, just some things to think on there. Let me see here. Hey there, ESC. Good to see you. Gary, checking in all the way from Namibia. Oh, man, that's very awesome. Good to see you checking in, man. Let me see here. Mudhog. Okay. Looks like just trying to get you all emotional about something. Autumn the Greatest, what's up? Says, hey, if someone new wanted to learn and into this kind of stuff, where would you direct them as a starting point? I mean, obviously, I think what we do is better than anyone else out there. And a lot of our members tend to agree. They've been to a lot of different groups or companies that do kind of what we do. And they seem to think that we're pretty great. And so I would suggest that you join us at howtotradetowin.com. Other than that, one of the best things you can probably do is follow me on Twitter. I often get access to free content from Elliott Wave International because of because of our partnership. Sometimes it's stuff that other people get. Sometimes it's stuff that just I can get, or just me and a few other people. And so that's a great place to kind of get involved in that. Other than that, I mean, honestly, there's a book, man. There's a book called The Socioeconomic Theory of Finance. And I would direct the hell out of you to there. Because, most people, when they try and teach you stuff when it comes to the charts, they try to teach you what you're seeing on the chart. The problem is you don't get any real understanding of what's going on. And by not having any real understanding of what's going on, the things on the charts can easily trick you. It can easily lure you into a bad situation. The Socioeconomic Theory of Finance is something I came across just a few years back after, almost 25 years of me doing this. And the thing that drew me to it was that what it discusses is exactly what I've come to understand through my quarter of a century here of trading. And so I was just like, oh, wow, there's actually something out there. I'm not the only one that sees things all the same way that I do. So I would always direct everybody there. Again, guys, life, things, everything is about cycles. The the moon, the way it moves around the earth, creates cycles with tides, stuff like that. And I'm not saying that necessarily influences what you do, though, I don't know. We're human beings, we're made up 80 somewhat percent of water there. There's all that other stuff. I don't want to go into all that, but the idea is that there's always cycles. History is just filled with cycles that repeat itself. People act in cycles. We do things in a specific way. The market is not random. And so the more you understand about the idea of cycles, about the idea that things repeat in a certain manner, it may not be exact, but it'll be similar. And I think that just helps you no matter what you're learning and how to trade and whatnot. I think that's probably one of the greatest things for people to do, and so many traders, new traders, just don't do it. And it's really a sad thing, because you're really just kind of, there's so much out there that you could be learning and understanding about what's going on, and you just completely ignore it purposely. I'm just a firm believer in whatever you're doing, just in life, and whatever you're trying to learn, whatever you're trying to do, the more that you can learn about it, the better you are, suited to it. So yeah, those are some things I think. That book's by Prechter. Yes. He happens to be the guy who started EWI, Elliott Wave International, decades ago. And so, I mean, it's a really great study in people and whatnot. You guys know, I've got this really diverse, large educational background. And people look and they go, man, what the heck? What is all this? What does law have to do with applied economic theory, with finance, with business, with political theory, with homeland security, all these things I have. But altogether, it's understanding how people act and interact, how they react, how systems are born and how they die, and just how people get to where they are. So everything that I've studied, through my education has been directed toward understanding people and groups and individuals. And so, with the, socioeconomic theory of finance, that's all right up the same alley right there. It's just an understanding of the underlying, because what you see on the chart here, guys, what you see on the chart is not really what's happening. This is not causing price to go up or down or whatever. This is a visual representation of fear and greed in the aggregate, right? So the market is the aggregate of people, and their aggregate level of fear or greed determines how the market moves. And so this is just a visual representation of it. But most people, most traders never get to the point where they recognize and understand that. So they're always at the behest of whatever happens, rather than being ahead of it. Yeah. Let me see here. Let me kind of catch up with you guys here. Mizamo, what's going on? Checking in from Amsterdam. Good to have you here. Crypto Girl, been a while since I talked to you. Good to see you here. Let me see here. I'm really going to screw up your name, and I'm apologizing in advance, but I'm going to try here. Afzal, is that your name? Checking in from Dubai. Man, whenever you feel FOMO, you watch my videos. I appreciate that, man. FOMO's a hard thing, guys. I always tell you, trading's simple, but it's not easy. All you're really looking for in trading is finding those areas of liquidity. That's all it really is. And I say that's all it really is, but it's difficult to combat the emotion and stuff that you feel, especially the newer trader you are, especially if you hang out on crypto Twitter, or other social media. So hopefully I do that for you guys. Hopefully, I help you with the FOMO. Just because you want a FOMO doesn't mean you're necessarily wrong in which way the direction, the price is going. But it's never a good thing to FOMO in on something. Because what that means is you weren't prepared. And if you weren't prepared, that means you don't know where things are potentially going or why. Or how far you can ride it or how far you need to ride it. So, the goal is always to be prepared. You want to get in before the FOMO kicks in. So many of our trades, guys, that we put out, it's always getting in early. One of our big ones as far as stocks go over the last year was Naked, I believe, right? We were way down in there, like under 10, under 5 cents, something like that. And that thing rallied up, well above $1, $2, whatever it happened to be there. I mean, it was a huge run up. And we didn't have to FOMO in. We were already there. And it made large moves in a day when it did. So, the goal, guys, is to be in something. Now, a lot of people online are going to feed you a bunch of BS. And I think they believe it. But they'll talk about, fundamentals about these and whatever. And, I'm willing to get in there and hold it because that coin's going to do something. Well, no, you don't know it's going to do something, especially not with crypto. And if it goes up, you think, I'm so smart. I know what I'm doing because I got in early and just held there. Well, no, you got lucky, really. And if Bitcoin's rising, again, it's the idea that, the rising tide lifts all ships. And so you're going to go up anyway, right? That doesn't make you a good trader, guys. But there's people out there who want you to believe that. These influencer accounts that are out there. And it sounds good until you step back for a minute and think about it logically, right? If Bitcoin's rising and everything's going up with it, and they bought something because it was low, because they knew it was going to do something, and then it goes up, they say, see, look, I'm correct. Well, no, we talk about this before, right? Logically, right? You can have, your premises can be false and still lead to a logical conclusion, but that doesn't mean your conclusion is correct. It is not true. It's true in relation to the false premises, but the bigger question that you're asking, it's false to that. So, but you get caught up in this as new traders because it sounds good. It sounds right. They sound like they know what they're talking about. They got some huge following, right? Unfortunately, that's what gets a lot of people lost money-wise here. That's why I started doing what I'm doing here. I had no intention of doing TWC at all. I was in law school and just saw a need for it because people were getting scammed out of their money with pump and dumps, and whatnot that I came across on Twitter. I was like, man, bad analysis. I was just like, guys, this is awful. So, yeah. Let me see here. Yeah, I'm not, as far as Bitcoin crashing, I'm kind of on the same page with Hank here. If Bitcoin's crashing, as far as the market goes, I think, the entire market just continues to go down with it. Now, that doesn't mean you can't have things that rise and spark because, remember back in 2018 when Bitcoin was falling off the 2017 all-time high, BNB was up, right? BNB was rising. And then, what was it, a year and a half later when Bitcoin was doing its thing and pulling back again, Link was rising, right? So, I mean, you always have these ones that go out. And that's why when we talk about the broader markets potentially topping out, everybody freaks out. Oh my gosh. I think everything has to drop. Well, at times, pretty much everything will be going down. But while it's going down there are some things that will continue to rise, depending on what they're related to. Because even in a bad market, even in a bad economy, there's still things that people need to do and things that people need. Medical care is still, you're going to need it. If the economy's going off the edge, you still need medical care, right? Things like that. People, other things people tend to drink, as economic times turn bad. So a lot of times you can watch, your alcohol, Budweiser, stuff like that. During 2008, when we had the great financial crisis, I believe Dollar Tree or Dollar General, whatever it was, one of those cheap stores, was just doing gangbusters, doing extremely well during that time. So, there's always things that are going to still do well. The goal is just to find them. But, if the market's going down, most everything's going to go with it. That doesn't mean you don't have opportunities to short it down or to buy the bounces. You just have to understand where you're at, and be realistic about it. Let me see here. Yeah, we'll have to get rid of some of these people here. Just coming in here to get you to pull on there. Let me see here. Jay can play. What's up, man? Yeah, you bought Naked at 8 cents. Yeah, that's what I thought. Yeah, it was there below like 10 cents or 5 cents or whatever when we got in there, right? And we had to hold a little bit, but man, that one day where it shot up like, gosh, I don't even know how much it shot up that day, where it popped up over $1, like in a day or two or whatever. Just huge, huge run. And we were all the way down there below 10 cents. It was awesome. So that's the way to trade, guys. Not FOMOing in after something's already rising. Because then you're, really kind of increasing the odds that you're buying the top. Potentially. If you're in at the bottom, though, for, because the charts say that there's a bottom there, more likely than not, you might have to hold a little bit. But when you do, man, just the upside, you let everybody else come in and FOMO in and raise that price for you. Right? Let me see here. You sold that for over $2, Jay? Nice, man. Nice. That's the kind of trades that you want to get. You get into like 8 cents and then sell it for over $2? Heck yeah. Oh, man. Let me see here. Hey there, Chris Baker. Good to see you checking in. Let me see here. So here's what we're looking at with Bitcoin. Again, it's either it breaks out here and goes up, or it comes on back down here, and then we have this larger wave 2 potentially playing out. And again, if it continues to get down below wave 2 here, this wave 2 at 43,955, then we're probably looking at the idea that this might be 5 and done on the way up. So wave 1 done, we'll pull back for wave 2. If that's the case, this high volume node here at about 39,775 looks like a pretty good area, as does this EQ of this demand structure here at about 38,459. But, even on the pullback toward that area, there's nothing going on there that says to me that it absolutely has to be the top here. This is, A down, wave B up here, and C down below that 28,800 swing low. It is what it is. We'll see what happens in this area here. Don't believe anybody tells you they definitely know where price is going. The best case scenario for them is they get lucky. That's the worst case scenario for you, though, because then you'll think that they know what they're talking about. Anybody that's guaranteeing you that price action is going to do A or B or whatever, they're just trying to sell you a bunch of manure, guys. Don't buy it, okay? Understand it's an opinion, and it may be a correct opinion. It may be. But just because it's a correct opinion doesn't mean you know. It doesn't mean you guarantee. To be able to guarantee means to be able to, to do that as a consistent basis. Otherwise it's just an opinion. So be careful with that, guys. And some opinions are stronger held than others, and that's okay. But you need to be able to recognize, when it's that's all it is an opinion. What I do with you guys is I say, listen, here's where it may be. If, we may have this count, and in order to add some validity to that, we have to go through this level and whatnot. But if it doesn't and it goes this other way, then that'll invalidate it, and then we're looking at a potential target down here. That's what I do. Is it gives you this information that you need to trade, guys. When you first come in, a lot of times you don't know where to put your stop losses. You don't know where your invalidation levels go. You don't know where your targets are and why. That's a lot of what we do there. So, yeah. Windy City Assassin, good to have you here, my friend. Let me see here. Let's see. So this is Bitcoin here. Now, here's the thing. So here's Bitcoin, right? And Bitcoin, again, I'm still more bullish than not on it. Again, it hasn't gone through any major levels that we need to see it to do so to kind of say, oh, that top's probably in there. And then if we look at the dollar and what's going on here, we've got this possible wave 2 completed here now. And so, but again, what we need is we need a breakout above the descending channel resistance. And then, we need an impulsive breakout through there, right? Something goes above there, which should then carry it above the 1 hour pivot. And that would be a bullish sign because we came in sideways between the pivot and the S1, came down to the S1 area, found support, rallied off that. So if we break out above the pivot, everything else aside, if you're trading pivots and you have this kind of happen and you break out above here, it usually signals that the bottom's in there and you're heading up. But what you need for extra confidence in that is the breakout above the swing high by the pivot. So breakout above the pivot and then this swing high, if you're just looking at pivots here, just naked chart like this, that's what I would be looking for to be bullish, to be really pretty bullish on locally here on the dollar. I want to see this breakout above the pivot and above that swing high. If it pulls back here, it'll get even more bullish if it pulls back to the pivot, finds support, and then breaks out again. I'll be even more bullish about it. As far as account goes, again, pattern target here, you're getting through the descending channel resistance. Pattern target of 0.698 above the point of breakout based on the height of the channel here. That carries it above the pivot, carries it above wave B resistance here. And then that adds confidence to this count. So then we look for a minimum wave parentheses 3 target up here at around 95,800. Oh, wait, maybe not. Let me see here. Was it the other one? Before you say I definitely said that. yeah. Up there around, let's see here. Pretty close. It came a little bit further here. 95.554. The other one is my larger count where we need to get through this, 94.742. That is my wave 4. Let me see here. Daily, there we go. That's this larger wave 4 on the downtrend here. If this bottoms in, then breaking out above this wave 4 is going to be your first macro clue here that bottom is in. So, yeah, so that's what we're going to look for on that. You can see right here, all we're really doing right here is finding, working our way through this resistance that's right here. So what you have is a lot of people who were shorting in this area. And so it sends this back down. It comes up here. And you're trying to work through all these people who are trying to protect their short positions in here. If you get a breakout above that area, all of a sudden you're open up through for a while here to this next cluster area up here. So if we can get that breakout above that, not even looking at it in waves, just looking at above that level there, that should run you up here to, 96 and a half, 97. Until you hit this next area here. So we'll see how that continues to play out. But definitely need to get above 94.742 on this more macro picture to say, okay, maybe we're headed on up out of there. Let me zoom this back in here. Breakdown below wave 2 here at 92.403 invalidates the count. That's your, if you're let's say doing I don't know, if you're trading the dollar, if you're long the dollar somewhere, like I said, I think the CBOE, or is it the CME? I can't remember. You can trade dollar futures. And so, if you broke down below here, that your stop loss needs to be there. If you're breaking down below that, that invalidates this count, potentially heading lower there. So, yeah. Good times there with that. So, looks interesting. Let's see here. Merv says, man, if this rallies. Yeah, right? I know. That's the whole thing. And, again, we look at everything. So we don't just look at, whoops, hit the wrong one there. We don't just, I keep hitting the wrong one. There we go. We don't just look at the dollar, right? Look at the dollar in relation to everything else. If you want to get, if you think that, if there's too much ambiguity in your analysis for the dollar there, start looking at other things, right? So what we can do is we can look at and see if you can find some confluence in there or some support for your ideas, right? Potentially. And so you look and then you go, okay, well, what's going on with the NASDAQ? And so with the NASDAQ here, got to pull this up here. It possibly may be at a top or nearing a top, right? So we've got this count here, if we zoom out a bit, that says we've got this, this wave. Gosh, man, I hate when all this stuff moves around. I don't know why it does that on TradingView. But you've got this 1, 2 here, leading to a 3, 4, and then you've got this ending diagonal as a wave 5 here, potentially, right? So you have this 1, 2, 3, 4, 5 finishing up here. So I'm going to zoom in because that just looks awful with everything on there. So if we've got a top with the NASDAQ, with the S&P E-minis, with stuff like that, at or near a top right now, I mean, that adds credence to the idea that that dollar may be bottomed. Because if the dollar's rallying up through there, your stock market's going to pull on back. So here you've got, your NASDAQ here. And so I have this as a 1, 2, 3, 4, 5, with the idea that if we break out through here, through the swing high, it's probably a 1, 2, 3, 4, 5. So we'll get a little bit higher on that. So, but the count is still at that end, potentially, right? At this all-time high here. And so if we jump there in and we look, okay, well, there's one index. NASDAQ's really tech-heavy. It's tech stocks, right? And we can zoom down a bit to the S&P E-minis. The S&P is, it's tech-heavy as well, but nowhere near as much as NASDAQ. So NASDAQ is like really tech-strong. S&P still is overweighted in tech, but not as much. So why I say this is because if tech is doing really well, then the NASDAQ should be popping on up there, which was leading last year, right? This last year. But also, if the tech stocks are not doing so well, then it's also going to lead the other way down. And so the NASDAQ will be at the forefront. Behind that should be the S&P. And so right here, as you can see, it spiked just above my target area here. And we're pulling down, and we're trying to find some support on this. Again, it's another ending diagonal here, potentially on that resistance, which really just ends up being this wave 3 area right here. But if we're zooming in there, this may potentially be 5 waves down, in which case you'll get 3 up and then looking for a drop down again. Again, the idea is if we're breaking out through the top here, we've still got some further to go. But if we're breaking down below this wave 4 right here, this is the very local first clue that you're going to get that the top may be in. And then you're going to want to just see some further breakdown below this wave 4 and really kind of this wave 4 down here. And you're really looking for them wave 4s as you're coming down. Because those are as we get to these different wave 4s, that's the larger and larger wave count. And so as we, close those out, that keeps that particular degree of wave count topped out, right? And potentially leading to the larger degree to be topped out. So that's what we're going to do as this continues to play down here. Can I show how to pair the DXY and Bitcoin USD? Well, your USD, let me think here. What are you trying to say? Yeah, you know what? Give me a minute to think about what you're trying to ask there. And let me finish with this real quick, and then we'll go to that. So if we jump over here to the DXY, or I'm sorry, not DXY, the Dow Jones here. So now we've got this. And so we've got this slightly higher high here. And so if we were to break down below wave B, that'd be the first clue that maybe the top's in here. Dropping down below this wave 4 would seal the deal on this, and this would give us a truncated 5th wave here. So we're waiting to see, do we get the breakdown below wave B and then below wave 4 here, or do we get a rally back up above this, kind of keeping this wave C in progress up here through at least this R2 pivot on the 1 hour at around 35,713, potentially closer to 35,925 up here. So nonetheless, these 3 large indexes, and the Dow Jones, remember, is not so tech heavy. It's much more broad-based. So that's why they look a little bit different on them, right? And so, it's possible if, I don't know, transports and stuff are doing well, but tech is doing terrible, that you could see the NASDAQ and the S&P top out and start pulling back while the Dow Jones continues to rise. And so then you get that divergence between your indexes, which often happens at market tops and bottoms. But again, we would have to see how that plays out with that. That's what we're kind of looking for with all that. So if you want to put your DXY there on your Bitcoin, so let's say you've got this Bitcoin chart right here, right? And so all you need to do is go up here to this little plus symbol. It says compare or add a symbol. Type in DXY. And when you put your cursor over it, notice it says same percentage scale, new price scale, new pane. You want the middle one, new price scale. And then it throws it over here. And then what you want to do is, if you're using log, which I am for the Bitcoin here, then you want to click on the panel here, this side thing here for DXY, and you just want to make sure that you right-click on it and see how it says regular. You want to take it to log as well, especially when it's larger time frame, because you'll notice the difference. But that's what you'll do right there. And then this. And you can just kind of pull your sides here together to kind of see how it all plays out. And if you want to move this one up, you just grab it and kind of move it with you there. So you can zoom out here to the daily and kind of get a better idea of how these play out. You see how they diverge here? And so, again, but notice this right here. You had this drop here, right here with the DXY, and everything just kind of dropping into, the DXY kind of leading this sharper drop. This was that March of 2020 right here. But you see at this point right here, right before we make that big drop, all of a sudden the dollar spikes and this goes down. And you see this across the other charts. You see it with gold as well, and silver and whatnot. Remember, when you have these large spikes of movement with the DXY, with the dollar, everything takes a hit at first. Nothing's spared. Your precious metals, everything. Now, like I said, eventually, if this becomes some big downtrend or a big uptrend for the dollar, big downtrend for the asset you're in, or the market just in general, say like the great financial crisis there in 2008 into 2009, what you'll see is your precious metals like gold will rally up out before the stock market bottoms. And so one thing I've been looking at is the possibility that if we get something like that with some big bear market thing going on with the economy, that Bitcoin, I think, may lead out in front of even precious metals, in front of gold and whatever. So we might be able to see Bitcoin rising from the ashes first, and something like that. That's something I'm interested in watching to see if that happens. So yeah. But you can see the same thing across all different markets. Of course, you can come in here and you can add multiple ones on here. So let's say you wanted to look at the Nasdaq. There we go. Let's say you want to look at the Nasdaq 100, right? And so new price scale here, or the right here, the US 100 here, new price scale again, right? And so it sets up now this blue one, which comes on this side over here. And so again, make sure you got it set with everything there, and then you can see how it drops all together with it here. Whoops. So again, you're looking at the DXY here and how it rises and boom, takes off, and how it does with all these other things here as well. It was this area right there. So again, you can kind of get an idea of what's going on with all that and how that rally leads to further down. But you can see, like right here in the Nasdaq 100 here, you can see that it was already headed down prior. And so then, of course, this takes off and that just sends it down further. But you can do that with everything. You can throw gold on here. You can go up here and let's say gold futures right here. Ow. See, if you do it wrong and you don't change the panel, it sets it on the same one here, and then it's a pain in the rear end. It's not the way you want it. So do it again here into the gold futures there, and then new price scale comes onto this side now. Just back and forth as you add more in there. Again, make sure you set it up with your log there, and then you can see right here, again here as well, that that gold as well, it dropped here also. See how this goes up here? Gold takes a hit, NASDAQ's hit, Bitcoin's hit. But you notice they were kind of doing that down thing at first, kind of into it. So pay attention to what's going on. Because as these things, I think what it comes out to is as these things start selling off, people become scared. And when they become scared, they go to the dollar because the dollar is the safe haven currency. Why is it? Because so much of the world's debt is denominated in dollars, and legally those people, those companies, those countries, whatever, have to pay back that debt in US dollars. So if the market starts falling off, they're fearful that the dollar is going to rise. And so then they go in, and it becomes, pretty much becomes this self-fulfilling type thing where they're jumping in there to grab those dollars because the higher the dollar value goes, the more expensive their debt becomes because they still have to buy those dollars. And so then they're all chasing dollar price up, which exasperates, which just makes that move even stronger there. But you notice before everything was kind of coming down before. And then it got to a point where people said, oh gosh, I got to get to the dollars. It's gotten to this point where now I'm scared. Go to dollars. And I think that's probably a better explanation for it than most. But yeah. So kind of an interesting thing to watch there if you haven't. Watch, if we get a top here and the markets go crazy, watch what happens with the dollar. Watch what happens with the dollar. Whoops. Up there. But like I said, again, it all drops at the same time. And then everybody kind of, runs into the dollar, and the dollar then just jumps. And then it makes everybody else even more fearful that they're going to have to pay higher cost for their, because think of it this way. If you have to pay higher cost for your debt, it's bad enough to have to pay more money when the economy's doing well. But if the economy's doing worse, where you're potentially going to have slower sales, less production, bottlenecks, whatever, all that kind of stuff. So you're making less money. Well, now that the cost of your debt is exponentially more impactful on your bottom line and could put you out of business depending on how bad it gets. Because regardless of what's going on with your business, whatever, you still got to pay back that debt with US dollars. And everybody else is running into it. The value of the dollar is rising. So now you're making less money. Your sales are less as the economy rolls over and does crappy. And so you have fewer dollars to pay your debt. And at the same time, your debt's becoming more expensive. You got to use more of those dollars to buy, or more of your currency to buy dollars to pay your debt. Hopefully that makes sense, guys. Because that's a big part of what goes on. The dollar is, in all these markets. It affects all these markets. People don't want to believe it does. I had so much blowback in 2018 when I was talking about how the dollar interacts with the markets and whatnot. And, again, it's just what it is. Let me catch up with you guys here. Yeah, Hank, but you notice that runaway cascading on BitMEX was all just part of what was going on overall. I mean, you say it's interesting as if, it shouldn't have happened, but you have to think, everything, as we showed you, everything was already going down. Bitcoin, stock market, gold, everything was already going down. And so when everybody started flipping to dollars to go along those dollars, that just made the impact stronger on that move down. And fear, and more people got fearful, more people sold out. And then here with Bitcoin, that would have triggered that issue that BitMEX had, which I believe we finally came to the understanding that was what was going on, right? I don't remember if there was ever any final kind of conclusion that that's what happened there. But I know when we were watching it, we were watching BitMEX leading the way down and then Coinbase leading the way back up. So your derivatives leading it down, your spot kind of leading back up, yeah. Merv says, if the DXY rallies from here, it's going to be pretty hard time for crypto. Doesn't look good to me. I don't know. Yeah, but, there's still the idea that, again, when we look at 1987, Black Monday there, we look at 1929, right before we had the Great Depression here in the U.S., like I said, both markets topped out. They actually hit their tops in August, and it wasn't until October that it really started, that you saw the big moves down. And so, does it have to be October this time? No, it could be, November, December, whatever. But it gives time for Bitcoin to potentially get a higher all-time high before it does kick in. But yeah, if the markets are topped out or are going to be topped out, and then, I don't see them moving down and Bitcoin moving up. It doesn't. I know people want to believe and they want it because they're so invested. They put probably too much money into Bitcoin. It's such an extremely speculative thing. And they need it to go up. And if it doesn't, that kind of puts them in a really bad position. So what we tend to do in those cases are we just block our mind to the realities of what we need to watch for, whatever, and we just kind of find those people. And we may not even realize we're doing it. We find those people who just kind of create this echo chamber around us that say the things that we need to hear. So within us, our emotions within us stay level and they don't freak out. And that's what people tend to do. But you definitely don't want to be at that point that that's what you're doing. Right? Let me see here. Hank says, I find it interesting to see the correlation with the other markets. Never looked at it like that, as I consider it to be a black swan. More a gray swan, apparently. Yeah. Again, everything was already headed down. And this is one great thing about if you understand, socioeconomic theory or, to a lesser degree, Elliott Wave theory, is that, what you tend to look at is, so if in the day-to-day here, we are often just interested in sound bites, right? Most of y'all are, right? Hopefully not anymore. Hopefully I've said it enough that you guys have become cognizant of it and not doing it anymore. But generally we do. People today do that, right? And so when it comes to, this just intensifies the idea that news creates movement. And so people go, oh, well, it was because that news event that said there, that's why the market did A, B, or C. But yet, if you look back on it, that's not a consistent thing. Sometimes the market moves with it. Sometimes it doesn't. Sometimes the exact same news event, multiple days apart, in one case, the market tanks, and in the next case, it fires up. So there's no consistently, historically, with news events and price movement. But what is consistent is you can usually see the top or the bottom of the movement on the chart there prior to the news event or at the time of that news event. It's coming to a top. It's coming to a bottom. And so these things are already in. That's what I always say. I always tell you guys that I don't really pay attention a whole lot to the news and what's going on there as far as market movement goes, more than, local knee-jerk reactions that may last a few days or a few weeks. The greater trend on the chart is already in. And so, again, remember what we're seeing on the charts is just the way that people in general move between fear and greed. So it's already in there. It's already in the charts. If it wasn't that news event, it would be a different news event, but it would be a news event that shows up all of a sudden that we can look back and do it. The thing is, there are news events and price action every single day, all day long, and a lot of significant ones. But we tend to only associate news events with price action movement when it suits us. And so, that gives us this false narrative that it's, this news comes out and that's why the market moved. When in reality, you could be in before it and be ready for it. Again, Naked's a great one. Naked was screaming us in the face. This was a bottom here. Now, obviously no guarantees ever, but man, so many things saying it was a bottom. And so everybody says, but look, it was this news event that price rose. Well, no, price rose because it was in the bottom and it was accumulating there and then it broke out. Yes, there was some news event that happened at the time. It might have gave it a little boost or something, but it was already doing that thing. It was already set to do that thing. So again, being in before it moves allows you to not have to worry about FOMOing in with it. The time is always different. Yeah, Hank, right? Always different. Let me catch up with you guys here. Kimasabi, what's up, man? He says, I was looking at a very large upwards trend channel on the weekly S&P 500. Could drop. COVID drop, got out of the channel. Stands to reason that we have an overthrow of the channel for a market top. I don't know that it stands to reason. We could. Throwovers and throw unders are never guaranteed. But when they do happen, what you expect is a movement out and then a movement back in pretty quickly. It shouldn't hang out above it for, days and days and days and weeks or whatever. But if you get that movement out of your channel or your wedge or whatever, and then it drops right back into it, you should be looking to continue in that direction then. So like if you got to throw over to the top and it drops right back down in, you should be looking for it to go lower. Often it's a huge sell because it's a hard sell-off. It's a last final thrust up, and then supply just whacks the heck out of it, sends it back down, and supply just keeps coming in. And nobody's willing to buy then, so you don't have buyers comparatively, and you have a significant amount of supply coming in, and price just kind of tanks on that. Yeah. Or again, if you're looking for a throw under, and then it pops back up, and then you just have all this demand and very little reason to sell into, very little supply coming, all this demand, and it just fires back up pretty strongly. Yeah. Kimazawi says news events are just appointments to trade a setup. Sver says, to me, this last run is like a miniature from the run to the all-time high. Says I copied the bar pattern. We had alternating divergences there. Saying here, how should one read alternating divergences? Well, if they're alternating divergences, it's because there is a usually either there's accumulation or distribution going on. So I've talked about this before, and so if you have, let's say you're making higher highs here and lower highs here, and then higher lows here and lower highs here. So you go bearish divergence, hidden bullish divergence, bearish divergence, hidden bullish divergence as you're building up. That could signal, again, either distribution coming in or accumulation coming in, happening there. But that's why you get that alternating back and forth. It usually denotes one of those two things. So yeah. Mike says, at what point do you think crypto will become a risk-off asset? In your opinion, what would need to happen? Oh, wow. I don't think that happens anytime soon. I don't know if it ever becomes one. I mean, the indexes, the stock markets are, risk-on assets. And they've been around for 100 plus years, right? So I don't think Bitcoin ever becomes a risk-off asset. I know there's lots of dreams for it to become some kind of global reserve currency and whatever. Maybe it happens. I don't know. Right now, there's absolutely nothing going on right now that would suggest that's even a chance. Other than the idea that we can't guarantee it wouldn't happen. Because it becoming one means that governments lose power. And so you say, oh, well, governments can't keep me from doing it. Sure they can. They do it all the time. I guarantee most of y'all won't be holding Bitcoin if they found a way to track your wallets and came home and shot you or stuck you in federal max security prison. A lot of y'all would be like, you know what? Hey, no, I'm good. I'm out of this. And that's fine. Why would you put yourself in a position to be, killed or just put away for, a long time in some prison? I mean, there's always those out there that are willing to take that kind of thing. Most of us aren't, and that's okay. That's okay. At the end of the day, guys, being a human being is about surviving. Your body even does it. When hypothermia, all this, all your blood and the warmth and everything comes into the core of your body. You may lose some fingers or some toes, but they're trying to keep you alive. Your body biologically is trying to do it. It's nature, man. We want to live. But yeah, I don't know that that it ever becomes a risk-off kind of thing. And it doesn't have to. Again, the stocks don't have to be risk-off for us to make a ton of money trading them, right? People have been doing it for, again, 100 years, right? But as long as governments are in charge, they're going to interfere with the economy, which means they're going to distort risk, and distorting risk leads to a buildup of waste. Capital being put to things that it shouldn't be put to, just because there's less risk or less perceived risk, and then that doesn't ever last. It always comes crumbling down. Again. You just think about it historically, 1929, just the big ones you think about, 1987, 2000, 2008, potentially what we got coming up. It always comes back. You can only do so much malinvestment before things kick back at you. So as long as governments are in charge, they'll always do it. Now, a lot of people dreaming about governments not being in charge. I like to dream about that myself. But the reality of it is that probably won't happen. Too many people are not interested in being their own bank. They're not interested in providing their own security. And it's not necessarily that their government makes life easier or cheaper or safer or whatever, but there is a perception that it does. Again, specifically in the U.S., you can think about the passage of the Patriot Act in 2001 after we had the attacks on 9/11, right? The towers. And I warned at the time that such a thing was going to lead to a greater usurpation of power by the government. Because the government never gives back what it takes. It always continues to take. And it's just the nature of power, guys. And so, but that's what's happened. If you look at the laws and the way in which things are viewed since then, it's become skewed. Even more so than what it already was. It wasn't like, it just happened in 2001 there. It's always happened. It's just that was one point where you had it. So again, I don't see that governments are going to ever not exist. And as long as they do, theories of power continue to prove that people are going to, that those who want to use the power are going to be the ones that go after it. And whether they believe what they're doing, whether they really truly believe what they're doing is right, or they're just trying to take advantage of the position of power, in either case, the outcome is always detrimental to just society in general, and usually subclasses of overall society. Not subclasses is that people are lower than but just if you look at society as a whole class, and you look at subclasses like white, black, Hispanic, male, female, trans, whatever, going through that. And so that's just what it is, guys. And I bring this up because I think it has a lot to do with what we're talking about here with Bitcoin, because the narrative, especially if you're new and just coming in, is that Bitcoin fixes all this. Well, even if it did, governments would never allow it to do so. And you say, we'll just overpower governments. No, we won't. People don't. And anytime a government reaches its end of its existence, another one is put in its place. People don't learn. So another good book that you guys can read having to do with cycles and stuff is The Fourth Turning. Pick a copy of that up, guys. Especially if you're not used to understanding cycles and human action and whatnot. It'll be a pretty amazing read for you. As far as that goes, yeah. Let me see here. I missed your question. Are you asking me if I did? I guess I must have. I just... how should we read alternating currents? I explained how you should read alternating divergences. Unless I'm not understanding what you mean. You read them as an understanding that prices that either there's accumulation or distribution going on there. But maybe I'm not understanding what you meant there. Try and give me a different way of explaining it there. if I didn't. I'll do my best here, guys, but I'm one man and my brain's often just leaves, goes on vacation, or does this 50 different directions type thing. Well, Zobia, what's up, man? Good to see you. Let me see here. Can we look at Sol USD? Sure, we can look at that. Again, this is the one we started picking up this week. There is our daily update for our tiers 2 and tier 3 members. And I think I had done this before, and I think the chart started like down here, but I went and searched and I found this FTX chart, which actually starts a little bit lower. And so the count is a little bit different than last time I did it here because of this extra bit. So I think we have a 1, 2, a 3, and then I think we've got a triangle. Looks like a pretty clear triangle for 4. And then coming off on that, we've got a 1, 2, 3, 4 ending diagonal for a 5. So there's 1, 2, 3, 4. And then we might be at the top here. Zooming in, this might be a 1, 2, 3, 4, 5. We'll see what goes on here. But we had targets here, 139.7275 and then 151.0575 if it kept going up. Let me zoom in here a little bit more. No, this looks like a wave 4 here. This looks like a 1, 2, 3, 4. We might have one more up here. Let me see. So this will give us a short wave 3. If this is. But, again, looking at this here, is this, where's your swing low? I think it's this other one. 66.1. I think it's 60. Okay, so it's right here. Yeah, so that might be it. That might be it. We've got a 1, 2, and maybe a 3, 4, and a 5. Either that or this is a 1, 2, and then this is 5 here. This is a 3, 4, and then we got a 5. So what you're looking for is, do we drop below this swing low right here? This 90.265. If we drop below that, then I believe it says the top's in here. And we came within, it was almost 131 or 130 there, 139. So we came in about $9 below the target there, if that's the top. However, if we can get a reversal out of here before it gets below that and pushes up above, then I look at this as a 1, 2, 3, 4, and then 5 potentially here. Or I guess maybe you could even, Sol has so much demand behind it that maybe you even get a 1, 2 here, a 3, 4 here, and then this is 1, 2, and you get a 3, 4, and a 5, and it might even go higher than this swing high here as you get like a blow off of excitement going on there. That's even possible. So you have your wave 1, which is small, your wave 3, which is larger, and then you have your wave 5, which becomes your largest wave. End of that move there. So, and there's no way to know for sure if that's what's happening at the moment here. It just depends. Do we drop below that swing low, or do we rally before it above this swing high? And then that opens up those possibilities to the higher high there. So, yeah. If you're trying to time this top here, I'm going to tell you right now, just be careful, guys. When you have an asset like this where you have so much demand following in with it, that the top is just really hard to figure out, the very highest point. And it could shoot up just really stupidly, or it could just all of a sudden supply just hit and shove it on down. So you just need to be careful there. Make sure that you've got your take profits set, and don't chase price. A lot of people get caught in this. They're interested in Sol now, and it goes up, and they're like, oh, I'm going to buy. And then all of a sudden, it just makes that a little bit higher up here. And so now they're up, maybe $10 or $15 above where they came in. So maybe 10%, right? And then all of a sudden it just gets shoved down on them. And in the matter of minutes, it's below where they entered. Be careful of that, guys. It's very good. Okay, I got it. Good. Sol's running out of fuel or just refueling, in your opinion? Oh, I think it's a top here. I've got a 5 count. Or, if it's not at this top, my targets are right in this area. So minimum of 139.7275, secondary of 151.0575. But again, as I just explained here, maybe this is a 1, 2, 3, 4, and then this just becomes a 1, 2, 3, 4, 5. And so you could either see some extensions of 3 and 5, or you could see 5 as an ending diagonal. So 1, 2, 3, 4, 5 kind of thing. There's just so many ways this can play out. So that's why we watch that swing low down there and then this swing high up here at this point. If it breaks down, that should note that that's the top. If it breaks out, that means we should potentially have these 2 targets. And it could just be something stupid and fire up, and next thing you know, it's 300 or something stupid like that. There's no way to know for sure. What we can know, though, is we measure out wave 3 here. If this is wave 3, we make sure, first of all, it's not the shortest wave. So if this is wave 3 here, wave 1 is 61.8% of wave 3. So wave 3 is larger than wave 1. I know it looks larger here, but that's just because of the logarithmic chart. normalizing that movement. But the shortest wave is wave 1. Wave 3 is longer, which means wave 5 can extend to 300 if it wanted to, and it would still be okay. But yeah, I mean, I think we're on that 5th wave, wave circle 5. So any pullbacks, I think, are probably going to come back toward this 43, 45 area here, this high volume node, which is this previous support here. I think wherever it ends up going there, I think that's where it comes down to. So in terms of this here, 23.6, quite possibly $40. Goes up here to 450 or whatever, or 530. I'm not saying it's going to go up there. I'm not even trying to get you guys excited. I'm just saying if it did something crazy like that, your 38.2 comes around there. So I think, it comes into this, probably that 40 to, $40 area or whatever on the pullback, 1, 2, and then potentially 3 up. Potentially. Unless this just, unless this gets in here and this is the end. And the tops may be in for Bitcoin or whatever, and we just go in this large bear market, in which case this thing just kind of sells off all the way down to $1 here, which is this wave 2 area. Something like that. So we'll just have to see how it plays out locally there. Higher low crypto, what's up, man? I see you checking in. Let me see. Just going to catch up with you guys here. George, what's going on, man? I'm not sure if you've looked at it yet, but on Bitcoin USD, would you say it's ending or leading diagonal for the move from the 30s to 50? It's potentially ending. That's something we've talked about a few times. Again, I pointed out that, again, I noted this when this was happening here, this curve. And I'm noting the possibility of it happening here as well. But, again, this could be, the 1, 2 here is this flat. This could be 3, 4. And then this could be 5. And here's the interesting thing. If this is 5, this is 1, then maybe this is ABC, ABC. And then we'll get 5 down here. And so it just becomes this is 1, this is 2, and then we're heading up. Is this an ending diagonal, though? I don't think so, because you have to look at this one right here. Here's your swing low. So, we're kind of looking at this. And we don't have a dip back down into here. Usually if you have a diagonal, an ending or leading diagonal, wave 4 should come back into wave 1. There's very rare occasions where it doesn't. So if it doesn't, I'm usually reluctant about the idea of it being a diagonal. And in this case, you could go A, B, C as 1, and then 2, and then A, B, C as 3, and then 4. And that's just so far off. I don't see that is happening there. But again, I think, if there's some kind of top here, I could see this potentially as a 1, 2, 3, 4, and then 1, 2, 3, 4, 5 gives us a 5, right? So now we've got 1, and then we have an A, B, C, A, B, C. So then A, B, 1, 2, 3, 4, 5. And so maybe it, bottoms out around, just a little bit below the swing low there. Maybe it comes all the way back to wave A here into this candle right here. This is the, in my time zone, that's the 8th of August. So it'd be right around there for you guys. 7th, 8th, 9th, right around there. That's what's supporting this here with your higher lows, and would support potentially another higher low coming off that. But until we actually get those breakdowns, I mean, the current count kind of sets it up for what it is, possibly, until it does. So, we'd have to go through losing this wave 2 swing low, which means we'll probably lose this one, which means this then potentially becomes an A, B, C. But if we lose this one, that's the bigger idea that maybe the wave 1 is done. And so again, it would be this idea that we've got an A, B, C, 1, 2, 3, 4, maybe a 5 down here. And again, that just becomes this target down here that we were kind of looking at if we continue down here, which is right around $44,080 or so. So yeah. So we'll see. We'll see how it does. Definitely possibilities there. If we can get a breakout above the swing high and the pivot, the 1 hour pivot here and above wave B, that adds a lot of confidence to the count as it sits. But, you know, we need to continue to make a breakout above wave 1 and then this wave 1 to kind of continue up here as it moves. Yeah, you should know better, but those hammer candles scare you. Yeah, you know, this is not a place where anything is definitive right now, guys. You know, again, this, in the grand scheme of things, really, we're just going sideways right here since, what, about a week now? We're just kind of going sideways. And really, it's on top of sideways that we did here from August 9th to August 18th. So almost 10 days sideways there. And then the 23rd to now, you know, almost another 10 days sideways sitting right on top of it. If you look at this, it's really kind of this area, guys. And then it's really kind of this area right here, right? So you've got this, you see how that support, this kind of area sits on top of this area. So as long as it holds, you're good to go. But if it gives way, then you're looking down toward the bottom here and maybe even lower like we were talking about. So that's kind of where I'm at with it. No real confidence in whether it's, you know, whether this count is correct or not yet. We need to see some follow through with price action to really kind of feel more secure about it. Until then, you know, feel free to play the lower time frames, keeping an eye on the larger ones. But we'll see here. You know, again, if this count is correct, we've got an A, a B, and we need just a little bit lower C here, but it can't drop below that wave too. So yeah. George, you're very welcome. You'd be so happy, Kevin, if SOL pulled the BNB, right? What is happening? What's up, man? You never catch me on time, but here now, representing Charlotte, North Carolina. Hey, I like Charlotte. It's all right area over there. North Carolina's not a terrible place to be. You got some nice beaches over there. Good to see you, man. And I know the Charlotte is not on the beach, but, you know, I was just saying. I've got water on the mind lately. Lakes, beaches, stuff like that. Welcome back, Crypto Girl. Let me see here. Bitcoin. Okay. I don't actually have a .BTC chart. So we'll have to see here real quick. Thank you for reminding me. Cue the action. Let's see here. We take care of the .USDT chart on daily at TWC, but not .Bitcoin. Oh, what am I doing here? Yes, that's what I wanted. So you're looking at the value of DOT against the value of Bitcoin. Let's see here. Yo, when comes the big dump for Bitcoin? You'll have to rewind. I've talked about it a few times. My thoughts on it anyway. You're heavy short right now? I wouldn't be heavy short. No, nothing's happened to give you reason to be heavy short at the moment. No major levels have been broken to the downside yet. I'm not saying they can't be, but you know, from a risk management perspective, I think it's a little early to be heavy short. But hopefully, you know, see, I say hopefully it works out for you, but then other people who are long will be like, what, you don't hope it works out for us? But you get what I mean, right? Let me see here. It looks like we've got a 1, 2, 3, 4, 5 here as a leading diagonal. Let's see here. And if we do, it looks like we've got an ABC down for a 2. It looks like we're 1, 2 here. Potentially. So if I look at this, I'm going, okay, we've got a 1, 2. Let me see here. Okay, yeah, so 3, probably a flat correction here. And a 5 there. Take off that red. And then it looks like we've got an A, B, 1, 2, 3, 4, 5 here. Which one's the low? I think it's that one. 35.28. 35, yeah, so it's that one right there. Now, I think you're getting up to toward the end of potentially like the first subwave here, so you might want to wait for a pullback and go off. It looks like you got a 1, 2, 3, 4, 5 potentially here. See, that would be a short 3 though. That's just barely above the wave 1 target, the wave 1 length there. See, we're just now hitting the 1618, which is where we usually look for a wave 3. We've got bearish divergence right now on the daily RSI here. We've got higher highs in price, lower highs here on the oscillator. But the daily isn't done, so, you know, no follow through yet to the downside. So if it continues, you know, if the RSI closes above 75.07, 75.07, if it closes above that, then, you know, it invalidates the idea of the bearish divergence there. So what we might actually have is 1, 2, 1, 2 here. So here's what I'm thinking. Either we've got a 1, 2, or we've got a 1, 2. Let me change the color on that one, an alternate. And then 1, 2. Like that. And so if it's the red count, we would have wave circle 3 in progress toward a minimum expected target up here of 77.58. So that would give us our 3 there. 4 on that pullback, about where we are pulling back right now. 5 a bit higher there at 84.14, which puts you kind of just right above, well, I guess right here at this support area. If we throw this in there. Notice, and always, guys, I'm going to keep reminding you, always look left. Notice that target hits this previous area of support. So it makes sense there would be resistance there. So a wave 5 there makes a lot of sense. You know, but that would just give you then your 3. And so looking for your 4 down here. Potentially, you know, I'm taking a lot of creativity with this, creative license with this, because we haven't actually seen which one of these counts it is, and if it is this other one, it could extend or whatever more. But if it follows generally what we expect to happen, then the red count would look something like this here, and that gives you this 90.53, 9053 kind of area is your minimum wave 5 target up here. And as you can see, again, that gets you right into this cluster here. Again, this whole area is a good projected, probably resistance area where you might get rejected before price continues higher, right? You don't normally expect it just to fire on out above your all-time high. You usually expect it to pull back and then head up. Even Bitcoin did that, right? Again, the other idea is maybe this is a 1, 2, 3, 4, 5 as a leading diagonal kind of thing. And so you'd be looking for a target here pretty close to where we're at. You know, this resistance of this, what would be this wedge here. And so if we got that, right here it looks like it's a 1, 2. So we get a 3 and a 4 and a pullback, 5 up maybe toward the R4 pivot here. And then I would expect a pullback probably to this 5,036 to 54.69 kind of area. That's your 50 to 38.2 retracement. As your wave 2 there. And then coming out of there, you know, you'd have your wave 3 breaking out. Minimum up here around 10,879. But at this moment, there's no way to know which one, for sure, which one that is. in either case, you kind of want to watch to see what this is the problem when you get in on a trend that's already developed. If you're trying to do it via Elliott Wave or something, it becomes a lot harder to figure out, okay, where are, which count is it particularly. Now, with what we do on Wednesdays at TWC, you've got, if you're part of that, you've got a ton of tools in your tool belt to use, different rules-based strategies to enter this trend and potentially ride it up to these possible targets. And so you can make some. Otherwise, it's a wait till it pulls back. Does it pull, does it go a little bit higher here and pull back to this orange area? Or does it go up, toward this wave 3 and then pull back for your wave 4, in which case you can maybe ride it for your wave 5 there. But, a lot of people take issue with Elliott Wave because sometimes it means they have to wait and people are impatient about trading, right? So we'll see. So that's kind of where we're looking at with all that. On that right there, as far as DOC goes against Bitcoin. It could very well be at the top here, or it's got further extension to go here before it gets a real pullback. But in either case, the count suggests that it's headed up. So if you're looking for a longer term play, you can get in here, and if it is, this red 5, you can bank that profit going in there and then sell in that area and kind of reload back down, when it pulls back. If it's the black count, you would just have to suffer through, mentally, emotionally through the pullback, and then it pushes back up and heads higher anyway. The first thing you want to see, though, in either case, to add confidence to really either one of those counts is that breakout above wave B here at 7,400 sats. Now, with that all said, if this count is correct, then wave 3, again, if you're just kind of willing just to get in and hold on, or, whatever you want to do to get in and go with it. Wave 3 here should have a, let's see what we do here. Minimum expected target up here of about 18,049 sats. And this is minimum. Again, here's the thing, guys. If this turns into be just a crazy Q4, a lot of these normal targets that we look for are just going to get obliterated. So, keep that in mind. A lot of money to be made. Don't be overly greedy if things get crazy in this Q4. Make sure you're taking your profits. Otherwise, you're going to be stuck with profits that you had in your head that you never got to realize, and you're going to be upset at yourself and kicking yourself. And it'll be a hard thing to get over. There's a lot of chance to really set yourself up nicely for the bear market. But you've got to be willing to pay attention to the market, not be overly greedy, take profits, when you need to, rather than just thinking it's always going to go higher. It may, but until you actually lock in that profit, it doesn't make a difference if it does or doesn't. I think it's where a lot of traders get caught, new traders. So, yeah. What are my general thoughts for Bitcoin and crypto in general? Right now I'm thinking maybe that we're going to have something similar to what we usually see at the tops of the cycles. So my initial thought is we're new all-time highs, potentially 92 to 102,000, just general targets, and then overextended targets, maybe hitting 182, maybe 320. But that really just depends on how strong that demand comes in. But we still have to get above the all-time high for those to even become actionable. So my view is that we're going to head that way, and we're going to do that. But I still need to see it getting up there. Now, if we pull back the other way and we start dropping down, let's say below that 28.8 low that we had, well, then things look like we might go a lot further in the other direction. That the top may really be in potentially. But even that, we would have to see larger targets to the downside to really kind of confirm that. There's just this large in-between because of the way in which Bitcoin's rallied. That is no real definitiveness there, until we're getting down there. Because again, with what we're looking at on Bitcoin, let me go with the daily here. Remember, we're looking at two possibilities here. One is that this is 3, and then ABC down, ABC up, 1, 2, 3, 4, 5, as a flat correction for wave 4, and then we're working on wave 5, right? But the other thought is maybe 3 is done up here, and now we got 1, 2, 3, 4, 5. That's A, and then we have 5 up, and this is B here, or maybe a little bit higher, and then we'll have C still going down. In which case, if that was, then from where we're at right now, wave, what was this talking about? Wave A would equal, wave C would equal wave A at about 14,000. Man, I like that, right? And that's just that. It could go further. The whole counts could be out. But I think right now it makes more sense that this is wave 4 is done and we've got one more higher up with wave 5 heading up into new all-time highs. So, again, but we've got to see it break down below these support areas here. Right there and right here to really kind of say, okay, I think we're really heading down below 28.8. There's a good chance. Until that point, again, this could just be 4 and done here, and then 1, 2, 3, 4, and maybe this is 5, and then A, B, and then you get this pullback down here for this flat correction for a wave 2, similar to this right here, right there. There's not a lot of definitiveness to the downside right now. We've still got support where we're at. We've still got support right under it here, and then we've got support right in this area. We break down below this area, and then it really starts looking like there's a good possibility heading down, 23,000 or, maybe even 14,000 or whatever. But then that just becomes, then we just have to count waves down. We're just looking for 5 down at that rate. And so it could just be a short. This is not overlapping, so my thought would be that wave C would be an ending diagonal in that case. So we'd have 1, 2, 3, 4, 5. In which case, it may not get below, again, our 23,000 kind of area here that we were looking at previously. And goes back up. I don't know that makes a lot of sense at the moment for it to do that, but that would be the possibility if it did. Let's see here. What's up, Common Man? Am I ready for Bitcoin to crash below 30K? Wave C just getting started? Yeah, again, you just heard me talking about that, so... I don't know. It's possible, but right now I'm still following this possible wave 4 is done here and we're on wave 5 count until we break it down below those support levels. Because there's different counts that come here because of all this sideways here and here, along with the possibility of what's going on there and here. So yeah, possible, but... I don't know, if I look here, I've got reaccumulation right here. So we've got this breakout. So maybe we're getting reaccumulation right here, lead to higher breakout. Because in this area, you can see that we've got this, this volume dropping off, which is usually indicative of absorption. Because the bigger players aren't putting in as much supply as they normally would to push price down. Same thing we have here. Volume dropping off as you range. So I don't see a lot of spikes of volume coming out at the top here, which is what I would expect to see. If there was distribution going on here, I would expect to see generally spikes of volume at near the tops. But we're not getting that. We're just getting kind of just some regular volume. So that keeps me iffy about this potentially being, A, B, and then C down. But again, it's still developing, so that can change. So we have to watch it as it does. Yeah. So yeah, that's kind of what I'm thinking about with that. I mean, I can't say that this isn't wave, A, this is B, and then we got C going. I can't say that's not happening. But if I'm looking locally here, I'm not seeing any real spikes of volume at the top, which is what I would want to be seeing as we're doing it. So we'll see if we get any coming in. But then we'll want to see, expansion of volume and larger candle spreads as it drops down to kind of show that supply is continually being thrown in the market, following price down rather than just at the top. So, yeah. Yeah. I'm not some 21-year-old moonboy YouTuber. Yeah, I do have experience. And I have enough experience to know that, again, nothing's ever guaranteed. The best you can do as a trader and what you should do is understand when you're looking at it where your validation and invalidation levels are and understand proper and utilize proper risk management. Those are the biggest things you can do as a trader. Those are the things that usually most new traders don't. Either they don't know that they need to be doing or they don't want to do it because it's the boring stuff. Unfortunately, the boring stuff is what makes you money, right? But yeah, so kind of looking at that there. We'll see what happens. I appreciate you coming, man. Always, buddy. Always. But yeah, so that's kind of where we're at here. We're just kind of doing some sideways right now. Finding resistance right here. Remember back down here, I said if we were breaking out, above this area here, that we'd be looking at resistance in this area to begin with, the bottom of this distribution here. And that's what we're doing. And so it's expected. It's, right where we were looking for. Now, what's interesting is I did have this thing that I drew back here. So I drew this, I guess probably right around the 14th of August. And so looking for further upside toward the R2 pivot and then potentially pulling back here toward this support. So, we kind of pulled back and continued up here. We're kind of at that area I was looking to get to, so we'll see if we do get that following down. Just a more basic chart that I was looking at. In terms of this, let's see here. Pattern targets, I think we hit this one too. Oh, whoops. Yeah, I think we hit that one already. Yeah, see, we already hit that pattern target off this descending channel here. So definitely wouldn't be surprised to see a pullback here. Again, it's that impulsive breakdown below this swing low that'll really get me more on the side of, okay, we've got further downside to go here. But until we get that, there's still a ton of counts, different counts that have this as a rally continuing. So we just play it shorter term as it's doing it until we get a larger term confirmation that we're heading up there. Yeah. Let me see here. Ellipsis says many stops under 46K. Let's go. Yeah. A lot of potential stops over there. Let me see. Right here, right? Yeah. Right before there. Or right below there. Yeah, exactly. And so, yeah, that becomes my point in the sand for, are we, going up higher here and breaking out now, or are we potentially pulling back and then going up or just pulling back further? Yeah. Until then, like I said, we've got all those different counts we're looking at here as price continues to develop. So we'll see what happens with it. Yeah. So that's kind of where we are with that. Real quick here, man. Let me jump on oil. Let me see what we're doing with oil real quick. Well, TLT, while we're looking at that, as I told Discord, TLT is something we follow a couple of times a week. My last update said we were probably looking for a rejection at the descending channel resistance, a pullback, and then a breakout. So I think we've got a 1-2 here and then a 1-2. You can see that we've just about bottomed out here and oversold on the 1 hour. And so if we're at or near this interior wave 2 here, that gives us a 3 at 152.64 and a 5 up here around 153.62 on the way toward this minimum wave circle 3 target of 156.26, as long as price remains above this wave 2 here. If we break down below this wave 2, that invalidates that count there. in which case we're probably looking at 1 and then A, B, C. So I'd look at potentially down here. Fills in right around 146 and some change to fill in this gap right here. That would be my next target area as an A, B, C, and then would look for that breakout. But again, remember, if TLT is rising, it's because people are nervous. Remember, this is the ETF that has your 20-plus year Treasury bonds. So these are your long-term government securities. These are as safe as you can get about protecting your wealth. The only way they don't pay out, those Treasury bonds, is if government goes under, if it just gets destroyed. As long as the government's still in action, still pumping, then you would get your value back. So when people are unsure about the markets or nervous about the markets, they tend to move their money from stocks and whatnot into those longer term government treasuries, or something like this ETF here that has those, to protect their wealth in those times of uncertainty. And so then you see TLT going up. Looking at that, I don't know, we haven't looked at the TLT junk for a while, which is your long-term government securities versus your junk bonds, which is your corporate securities. Let me see here. Yeah, remember, still at the bottom there. So generally risk off. Risk off when this goes up, risk on when it goes down. Because when it goes down, this is TLT versus junk. So when it goes down, people are moving into junk bonds, into corporate bonds, and out of your long-term government securities, which means they're taking on more risk. They see the market is safer, is safe enough to be adding to their risk. But when it goes up, you're getting that move from corporate junk bonds to your government securities as a protection. So again, that becomes risk off. So here we are moving up. 1, 2. It's possible that we could have like a 1, 2, and then a 1, 2, 3, and maybe 4 is a triangle. A, B, C, D, E, and then 5. That gives us a 1, 2, 3, 4, 5. But nonetheless, still kind of rising up there. I guess it's possible 1, 2, 3, 4, 5. Let's see here. If this is wave 3, and we're definitely larger than wave 1. Wave 5's larger there, and let me see, wave 3. If this was some kind of short, oh no, it's 1618. Okay, so yeah, so quite possibly top here, 1, 2, 3, 4, 5, and then A, B, C, maybe coming down toward 132, and look for a rally off that. And if we can get that, it might even just be caught, right under here, but we'll look for that pullback toward there. That gives us a 3 up here at $1.58, which is almost that pattern target. Gives us a wave 2 up here, or wave 5 up here, 1.64. So strong potential movement on that as well. Going on there. Oh man, I gotta get out of here. Let me pull up oil for you guys real quick here, because oil, you want to watch oil, guys. If oil goes down, it's like real estate. If oil's going down, usually it means the economy's not doing so great. And so kind of like with real estate, if real estate starts topping out, you usually expect the economy to pull back. So here we are with it right now. Possibly wave A potentially done up here off the May 2020 low at negative 40 somewhat dollars. And then I've got maybe a 1, 2, like an ABC 1, 2, ABC 3, 4, and then maybe an ABC 5 down here toward the $60 range. And then, that becomes a 1 or an A, and then we'll have up, and then we'll have further downside. I'm looking at the only thing that changes that locally here, we need to remain below this wave 4 swing high up here at 69, 64. So I think we have a 1, 2, 3, 4, 5 here, and then ABC. And then I think we have like a 1, 2 as a flat. Stopped 1 penny shy of the top here. And then 3, 4, 5 gives us maybe an ABC. So we have this 1, 2 with a minimum wave 3 target down here at 66.09. But locally here, 1, 2 potentially coming down further. And so if you want to do that, if you're doing oil options or something, you've got a wave 3 down here at 67.22, which takes you right into this 1 hour demand structure right here in this wick. And so as you can see, it actually takes you right to the EQ. So get you a 3, 4 pull on the pullback, and then 5 down here to around 66.76, which means that this wave 3 will probably end up lower, maybe closer to this wave 5 down here at 65.50 as this overextends. Because you got a 1, 2, and then you'll have a 1, 2, 3, 4, 5, and then 1, 2, 3, 4, 5, trying to get you closer to getting a wave 1, 5 waves down toward this swing low here, which is what we often look for. So yeah. But anyway, so that's what I'm looking at there. Let me see here. So yeah, so that'll do it, guys. I'm over 1 o'clock, so I'm going to get out of here. As always, guys, remember, the only thing you control in the market is how much you lose. So, keep working on the risk management. That is where you're going to make your money, guys. The things I show you up here are relevant at the time I'm showing them to you. As the market continues to ebb and flow and do its thing, as price action develops, that's new information coming in, and it may or may not invalidate or confirm what I'm looking at right now. Again, that's why we do the constant updates over in TWC. Whether it's multi times a day or at least daily or whatever, just to kind of keep us on track of what may be going on. But that's where we're at, guys. So pay attention to real estate, home builder, stuff like that. Pay attention to oil. Everybody wants to pay attention to gold, but pay attention to those other things. I think they're more important for where the economy's going. All right? Join us at howtotradetowin.com. We'd love to have you there. If not, I will be back on Tuesday at 11 a.m. Central Standard Time, and hope to see you all then. You guys have an amazing day. No. This is Tuesday. I'll be back Friday, 11 a.m. Central Standard Time. Getting to that weekend already. You guys have a great day. Take care.